Woohoo! It's Tuesday, and boy, has it been an exciting 24 hours, maybe a little more. Let's call it 36, or else the armchair trolls will come after me. But literally, yesterday, Bitcoin was at 29K, and then it shot to 35K, and that's how fast things move. And I always say, every 10 years, there's 30 days that matter. Well, yesterday is one of those days. So happy Tuesday. This is OCTA. We look at a whole bunch of data, charts, on-chain information to try to figure out exactly where we're going. We'll also look at some new stuff today, which is kind of interesting too. But the crypto market cap is just shy of 1.3 trillion. The 24-hour volume is $102 billion. It was 20 billion a couple of weeks ago. It's 5x'd. Action is back. Bitcoin right now is just shy of 34,000. Dominance 53%. Not that that matters. And ETH just shy of $1,800. ETH came back to life. I was getting so frustrated last week. I was going mad. And fear and greed is 66. People are greedy. And that means markets are good. So let's talk about it as well. What happened? Well, today's story is about when Bitcoin never dips. The surprise chart. And last week, the topic was the ETF was inevitable. And I shared a whole bunch of points as to why. And that's why the market pumped. The KUSIP number was issued. The ticker was issued. BlackRock are preceding their ETF, which means buying bags. All the buying we've been seeing over the last week or so that's done. And they have to get it all done by the end of October, which means November could be the ETF, which means more bonkers time. So again, remember, do not jump in front of a freight train. Things can move very fast. And anything I say here is edutainment. It's not financial advice. And don't forget to subscribe to the channel. You will never find more information in 20, 30 minutes than you will here. Today, we've got about 55 nuggets. So we're going to start today with the ugly news as well, because there is ugly news. Thank you, Nick, up there in Canada. You guys are so gracious. I wish I had my Canadian mug right now. Stock market, the last 7 days. Nasty, nasty, nasty. Red across the board with very few exceptions, like a phone company and a company that makes Procter & Gamble, whatever they make, detergent and stuff. Mr. Garcia, gracias. Walmart was up too. Walmart normally does well in times of recession. So now the drums are beating as well, that things are kind of getting scary. And a lot of that is driven by the high interest rates as well. The pain and the cracks are beginning to show at last, and there's a lot more pain to come. But that doesn't matter for things like disruptive assets, and we'll talk more about that later too. So let's talk about the big unlocks this week in crypto. Be careful if you own any EULA. EUL is the ticker. GAL. I think it's a gaming thing. YGG, Wild Guild Games, Yield Guild Games or something. Another money grab. Optimism and DYDX. 1 inch and GMT are there, but the big ones are DYDX and Optimism. Optimism will rain tokens for now until the end of the next bull run. So be careful. Do not hold that. There's nothing wrong with the chain. Well, there's a few things wrong with the chain, but the selling pressure will continually eat at upwards price projection. It's not going to happen. Okay, so just remember that. That's why we share this stuff. Also, another sad news, we have the highest ever delinquency on car payments in the United States right now. Another piece of pain related to the high interest rates. There is a record number of borrowers now that are 60 days late on their car loans. And I heard as well from people in the US, you have a thing called repo companies, repossession. They send people out to steal your car back when you don't pay. The repo people aren't even available anymore because there's so much repo happening. The car companies are paying like double the normal repo rate just to get the car back. And that's been bought up by the Toyotas and the Mazdas of the world right now. So it is a bad time, really bad time for the car industry. Well, not all the car industry. We'll touch on that later too. And another havoc wreaked by high interest rates. US 30-year mortgage in the United States hits a record 8.347%. We haven't seen it this high for 25 years, a quarter of a century. And that has put the skids on home sales in the United States. But that also can bring about an opportunity too. When people cannot buy and people are forced to sell, you can get a great deal. Rates will come down. Give it 18 to 24 months. They'll be back around 3 or 4%. Just in the meantime, think about it. The trade-off between getting a good deal in the house and suffering with the high payments for a year, year and a half. But they will come down. That is a sure thing. Also, U.S. deficits are exploding like there is no tomorrow. I did warn you I'm starting with the ugly news first. It'll get better. but we got to, whatever there's most preponderance of, I start with. In fiscal year 2023, the US ran a deficit so far of 1.7 trillion. However, there's a whole bunch of stuff that you need to add back to get the true number. And of course, the government doesn't share that. It's way over 2 trillion. My target for the whole year is over 2.4 trillion. And to put this in perspective, the annual US deficit is roughly equal to the total income tax collected. It also means that the 2023 deficit is nearly 5 times as large as corporate income taxes. All the American businesses, okay? The deficit is 5 times what they pay in taxes. So they might as well just not pay taxes if you're a corporation, because it's going to be a spit in the bucket anyway. The deficit is insane. It is also far larger than the total Social Security outlays. And then interest will be $1 trillion. And this doesn't even include things like the student loan forgiveness and all that other good stuff. It is insane, the amount of debt. Over $2 trillion in the space of 8 or 12 weeks added to the debt. And it's only exploding. As the deficits explode, the debt has to explode. And that's where we are. It's kind of crazy. Now, good news. Sorry to start with the darkness, but there's lots of good news too. First of all, there's been a change in the Bitcoin halving clock. I had my own calculations. I said the date would be April 14th, 2024. Then when I started looking at the halving clock a few months ago, they went to April 19th. But look what happened. Between last week and this week, that date, halving date, has moved to April 12th. So it's a lot closer to my original April 14th. So we'll see exactly who wins. We should do a little wager, me against the halving clock. I'll still stick with the April 14th special day. So T-minus 171 days to the Bitcoin halving. And I did promise you all that BlackRock would have their spot ETF before the halving. They had to. There'd be too much price appreciation otherwise. And we're seeing that happen right now. Now let's talk about Uptober. I also promised you in October. So far, Bitcoin is up 26.31% in the month of October, which is bonkers. The average return for October is 27.84%. So we're so shy of that. And again, as I say, this time is different. We are seeing a lot of stuff happening a lot earlier. And it's all because the big money is coming. Bitcoin is now recognized as a true asset class. In the past years, past bull runs, past halving cycles, it was like a fringe element that invested, like myself. Now it's different. So, also, the reason for the rally yesterday, I did an emergency video. Let me see if that was the kind of breaking news video. That was watched 80,000 times in 12 hours. Never had that before. Anyhow, the ticker came out from the KUSIP number. And this is for the new iShares, which is part of BlackRock. It's how they issue all of their ETFs. The ticker is IBTC. All of the iShares starts with an I, and they nailed it first. They got the IBTC. Nice ticker. You'll all see a lot more of that ticker in the very near future. It's going to be bonkers. I also promised you that. So that was yesterday's video and yesterday's news. But let's look forward as to what's going on in the real world. The US 10-year is what's been rattling a lot of people. That shot above 5%, but only very briefly, and then it came back down to earth. Now, I don't know if it's a coincidence that Bitcoin rallied at the same time that the 5-year or the 10-year came down below 5%. I don't think so, but it's interesting to see the correlation here. Typically, they'll go in reverse as well. And there's a lot of things that help risk assets. But now, Bitcoin is not only a risk asset, but it's also a risk-off asset, depending on where you are in the world. It's weird. How can you be both things at the same time? And that's the power of this asset. It's very special. Even Larry Fink realizes that. So let's talk about the fear and greed. Look at that big spike up to 66. This causes a lot of FOMO. A lot of people feeling FOMO right now. A lot of people not on the train. A lot of people watched the train yesterday go from 29 to 35 and they were sick. And now they're still not on the train and they don't know what to do. And that's a horrible position to be in. Therefore, you need tools to take the emotion out of it. Because if you rely on your emotion to make decisions, you're not going to get anywhere. Okay? So I just want to, you've heard me say that before. Let's look at some crypto stats. Today, crypto market cap 1.3 trillion, users 5.68 million. That's down from what it was 3 weeks ago, but the number of transactions is up. 40 million transactions in 24 hours, which is huge. And of course, the crypto market cap is up over nearly 25%, all driven by some of the big names and some of the other names too. We're going to talk about a few of those as well in a minute. Now, this is kind of the story for today. and it's a super chart to look at, and it'll also help you make macro decisions. And I remember a friend of the channel, Rob, he always says, if in doubt, zoom out. I've heard different versions of that as well over the years, and it's so true. This is what they call the 200-week moving average, and what's beautiful about it is it never dips. The Bitcoin price never goes under the 200-week moving average, and the 200-week moving average hit 28,270 just on October 22nd. Now, the x-axis here is the timeline, and it goes back from 2012 all the way to today, 11 years. And it shows obviously you don't have 200 weeks moving average, so you got to start in 2012 because in 2009 you don't have enough time to generate that type of information. Also, the price is on the left axis, and this illustrates pricing, of course, in US dollars. We'll talk about some other currencies too in a minute. And the purple curve is the 200-week moving average. And here you can see it just keeps going up and up and up. So when you see a price of 28,270 for the 200-week moving average, it is literally a foolproof indicator. If you buy at that price, you cannot lose unless history is different. It has never dipped below that. So when people are talking about, I'm still waiting for 25,000 or 20,000, that will tell you it's not going to happen. Okay, so some fun. That's what Bitcoin never dips below. So take that $28,870 and stick it in your pocket and remember that number. And if we ever get close to that again, it's a very safe place to buy. All right, let's move on. Let's look at some of my layers from our layer in, layer out model. And it's interesting because again, we're zooming out here. We're getting a feel for where things are and where we are in our little journey right now, taking into account the last bull run too. Now, the problem is I'm looking at a screen that it's hard for me to see. So bear with me as I try remember some of these layers. The layer out model corresponds literally perfectly to historical layers of support. So on this chart at the very bottom, you got the COVID low. That's an anomaly that's throwing a lot of people off. That was a black swan event where everything shut down. Market dipped for a few hours and then bounced right back in a huge V-shaped recovery. So do not take that into account unless you're going to have another C19 situation. Then we had the rock bottom of 2022, down around 15.5. But many people believe, and in fact, I think it was 2 weeks ago, that $30,000 would have been the bottom if it wasn't for all the black swans that hit, all the stuff, all the scammers, all the thieves, all the lying bags of poop out there, those horrible people that I hope they go to jail forever. They brought this down. So again, 30K, which I call spring 2022 support, 30,000, should have been the bottom, but it wasn't. We were just hit again and again and again until ultimately FTX took us down to the next level of 15.5. And then since then, it's been up. But let's look at the January 2022 support line. That was 36,000, which is exactly corresponding to, I think it's layer 6 on the model here. And then layer 7, I could have these numbers wrong. I'm going from memory here. You've got the spring resistance, spring 2022, $44,000. Again, it's in the model. And again, the resistance is 60K. So we are coming up. We actually hit the 35K yesterday and got rejected off it. But that's where we are right now. The jump yesterday shot through 1, 2, 3 and hit 4 layers, all in the space of 1 day, which is insane. So they are the layers. And they are the kind of the macro targets you're looking for things to be able to take a breather. Nothing goes straight up or straight down. It's always like jagged, okay? Like a Wyckoff curve. And that's where we are today. So think about those levels again. I'll repeat them one more time. We have right now 35K, a little bit of resistance showing up there, but we should blast through it. And remember, it's funny. I did say all for the last 3 or 4 months, the target for the halving for me was between 35 and 42K. Now it looks like I may need to up those targets because we already hit 35K. So after 35K is that 44 to 42K. And then after that, we could go straight to 60K. Again, there's not much available for sale. Therefore, when the money comes in from the institutional spot ETFs, this thing is going to go bonkers. That's why I keep on saying this time is different. It's going to be superb, and stay healthy and watch and enjoy the ride. Another view of where we are up that 60K level. Shout out to Sanjay for sharing this with me. This from Will Clemente. And he says there's a good chance the ETF listing is going to happen in the very short term, but we have to reclaim the 2021 to 2022 range. In my opinion, this is the setup, this Will Clemente setup over the next 12 months is between this zone of, say, 34K up to that $61,000 mark. And that is, by the way, the crazy thing about this chart is Bitcoin's up 100% year to date. 100%. Who saw that coming? And to get to the 61K, it's only another 70% ride. That's why I keep on stressing it's so important. Get in early, get in hard. If you wait, you leave a lot of opportunity on the table. You buy at 15.5, 16K, whatever, and you ride it to a 60K, that is a nice 4x. If you're getting on the train now, you just have 70% return instead of 400. So that's the key message here. Now let's talk about some other currencies too. Shout out to Shark Puncture, who brought this to my attention. Bitcoin is up 140% year to date in yen. And the cost of a Bitcoin now is over 5 million yen. Think about that, ladies and gentlemen. 5 million yen. Most of my life, the dollar yen was trading about 100 to 1. Now it's different. Now one Bitcoin is over 5 million yen. I never thought I'd see the day. But in the US dollars, Bitcoin's only up 100%. In yen terms, it's up 140%. But it gets better. Imagine having some rubles. Bitcoin is up 166% year to date in Russian rubles. Nuts! Obviously, I always say, got fiat. This is why you don't want to hold fiat. And the US dollar will eventually be like these other currencies. The yen is like a top currency. Of course, ruble, well, I'm not going to say anything bad about that in case I get into trouble. Anywho, Bitcoin futures exploded. I did touch on this yesterday at DCA. And the aggregate open interest of Bitcoin futures went through the roof yesterday. This is how people get exposure. All Bitcoin proxies, all futures went nuts. Everybody wanted to get on the train real fast, as quickly as they could with leverage and everything else. And we saw some of the results of that today because some of the action didn't really happen until after the market closed. And then we saw names like all the miners, MicroStrategy, etc., up like 15 to 20% real fast today. And they are big moves. You have an asset like MicroStrategy went from, I think it was 370 yesterday or 355, 365. I can't remember, shooting all the way to 440. Big move. That's why it's fun to be on those trains. Let's follow the money. As we've been talking about money a lot in this channel. Digital asset products saw inflows for the fourth consecutive week, totaling 66 million. Total value now is 33 billion. Remember, a half of 1% of assets under management from some of the 8 big players that have allocations. You just calculate for me, what's 1/2 of 1% of 27 trillion? That's what could come into this space. We talk about the amount in these funds right now of only 33 billion. It's nothing. It is nothing. That's why this time is very different. It's going to be very exciting. Now, the most recent inflows were linked to the excitement over the spot ETF launch in the US. And it's just happening. But there's more. Let's break it down. Let's find out exactly where the money is going. And 84% of the inflows did go into Bitcoin. And this pushed inflows year to date to $315 million. And earlier, you can see the short Bitcoin fund had some drainage. People got out of it, and then they got back into it a little bit this week because they want to protect their assets after such a big rise. However, I expect next week you'll see that come down a lot because everybody's going into full bullish mode, especially if you just look at the fear and greed at 66. It tells you exactly what's happening. Now, I have another typical red line there. This year has been absolutely insane for Solana. Ethereum continued the outflows, down 7.4 million. And the only altcoin to see outflows last week was Ethereum. This is in stark contrast to Solana, which saw another $15.5 million of inflows last week, bringing the year-to-date inflows to 74 million, representing 47% of the total assets under management for this fund. And it's growing. I made a video about this as the new consensus investment. You see it. I've been talking about it all year. Follow the money, and then you know where the ball, the puck, whatever it is going to be. It works. That's why we do it. Now, in other news too, and this time it's different news. This is from Econometrics. You can see here this chart is really beautiful and pretty, and I love the colors. So shout out to Econometrics. But let's talk about the colors first. The the first halving cycle doesn't really count, so forget about that. The second one is the 2015. That's considered the first halving cycle. And then the second halving cycle is the blue line. That's like the 2018 version. And then the current is the orange. So what do you see here? These are kind of the bear markets from the top to the bottom and the recovery. So the big things you see here, obviously in days, there's a lot of information here that, again, is so important. First of all, you can see the drawdown in percentage terms on the left axis. If it's minus 50%, that's how much the drawdown is. And the color-coded lines I mentioned represent the markets. Now, if we look at the history, you've got the very first one was hit a bottom at down 85% drawdown after 411 days. The second cycle, down 84% after 364 days. 1 day shy of 1 year. This is uncanny. But guess what? The most current cycle, 77% down after 365 days, on the nose, exactly a year. So we're seeing less drawdown. And as I said before, if it wasn't for all the black swans, it wouldn't have gone down that far. It would have gone to 30K. And that was verified by other people. I always said that, but now I've got other people saying that too. So I hope I'm not in a big echo chamber. But the point here is, if you look at the orange line, we are now up higher than the previous cycles. It pierced through the blue one, which is the last cycle, and far higher than the green one. And that's why I say this time is different. That's why things are going to happen sooner. Again, like my 35K target for the halving, April 14th, we hit it yesterday, which is nuts. So everything's going up much faster, which is exciting time. So you don't want to not be on the train, as it were. Now, let's talk about Bitcoin miners too. This has a big impact on sell pressure too. And I analyzed the miners in the top and bottom indicator here. And you can see that the miners have slowed their selling of Bitcoin since last week. Last week, they were dumping as quickly as they could. And now they've hit the pause button. And very few are actually selling. They're back into hodl mode, which is good. That helps the price too. Now let's look at the numbers over the last 7 days divided by Bitcoin. You can see here, I think Solana's up about 7-8% to beat it. A few other names beat it too. MINA, AAVE, Aptos, Chainlink, they all beat it. Everything else bled into Bitcoin. And again, it's nice to see some of the older names like the AAVEs of the world and the MINAs and the Chainlinks doing very well and performing better than Bitcoin. That's why it's dangerous to just trade dominance. You got to excise the winners, surgically pull them out. Now, over the last week, it's a very different story. Everything's green. Everything went up. You had some days like Solana up 30%, Matic up, I can't read that number, but dark green too, which means it's up over 15 or 20%. Bitcoin up 18%, massive. Ethereum on the move, up 11%, etc. Everything went up apart from a few obscure names. So that was very, very positive. Great week. Now, let's look at the asset class itself. These are the top assets in terms of market cap. I did share this last week because I had a feeling we were going to eclipse Eli Lilly, but I didn't expect it to happen in a week, but we did. So Bitcoin last week was ranked number 13 in terms of assets in the world, and I just jumped to number 12. And next in the box is Tesla, if it can beat Tesla. That is in number 11 currently, and everything with the green tick is what I currently own in full disclosure. So that is Alphabet, Nvidia, Meta, Tesla, and Bitcoin. So it's good to be in these big, disruptive, safe, fast-growing assets too. Let's look at the top three last week. Here, Bitcoin up that massive 21%, Ethereum 14%, and Binance 8%. Lagging, but Binance is off that magical 250 number, which is very important. So again, a crazy good week for crypto and Bitcoin. These are the top three winners and losers last week. MINA Protocol, Chainlink, and AAVE. MINA up 147% in a week. And that's more than it did last year to date. Chainlink up 40%, up 86% year to date. AAVE up 36%, up 63% year to date. And the losers, XMR, LILO, and OKB, down just a little bit. But again, very few names actually lost last week. Everything was a sea of green, as we showed here. So if you're losing after such a bonkers week, chances are there's a problem with the protocol. Let's look at a chart of AAVE as well, a blast in the past. I used to own AAVE back in the past. And this is the the trip. It's come on, and AAVE is up 59% year to date. It's not a zombie. It's alive, but has a long way to go back to its all-time high. But still, it's alive and well, which is good because there are many old crypto names that are not. They are kind of dead. So we'll watch this very carefully. And what's also crazy is MINA protocol had all of its gains, like all of the year-to-date gains actually happened today. So these things, the reason I'm showing this is these things kind of look dead for a long time. And then all of a sudden, they're like a zombie coming out of the grave, like putting their hand up out of the soil and coming out. And they're alive and they move a huge amount in a short amount of time, which is insane. So we don't know what's going to pop next, but certain things are popping. So it's good to see. I've never analyzed MINA protocol, but well, maybe it's worth a look to see if anything's going on there. Now, AltSeason Index, clearly still Bitcoin season after all the strength. Zeno, good to see you here. We're down at 16. And again, as I mentioned, there are very select names that have done extremely well over the last week and the last month. The Injectives, the Renders, the Solanas. Solana's up way over 200% year to date. So things are really, certain things are going very, very well. Let's look at Bitcoin Nasdaq Correlation 2. This will take a lot of people by surprise because it was 90 days ago. Bitcoin was actually higher. Not higher, but doing better than it was right now. And this is a chart that measures, I think it's yesterday as a point of time or today a point of time. But so far, over the last 90 days, Bitcoin is actually down about 9%, which doesn't make sense now that I think about it. This must have been measured before the lunchtime rampage yesterday. And the QQQ is up 1.5%. This will look very different next week. I'm not sure why it's down. They must have some measurement problem. But I go to the Nasdaq Correlation website to find this information. Now let's talk about Tesla. And Tesla still have not sold any of their Bitcoin after they did sell a big chunk a long time ago. But I was intrigued and I wanted to calculate exactly what they paid for Bitcoin. I knew they paid somewhere between 20,000 and 30,000 of Bitcoin, but I did not know they paid so little. Okay, so they have, I think they bought over a long period of time, like 90 days or so. But if you look at the number of Bitcoin that Tesla actually has today, they have 10,725 Bitcoin on the balance sheet. The carry value is 184 million. And that means the cost of each Bitcoin that they paid for it was 17,156. The Bitcoin price today is 33,859. So the value is 363 million, and they've made nearly 100% on that investment. And now they've got $179 million of unrealized gains on tap. If ever they need it, they can pull that in real quick. But by the way, because they have so much cash and they're making 5% on their cash, over $24 billion in cash, they make multiples at an interest right now. And that's how much cash and interest rates can work on the other side as well, if you have a lot. Speaking of ICE as well, some sad news for Volkswagen. Volkswagen used to be the biggest selling car in the history of Norway, where they sold more Volkswagen Beetles in whatever year it was, 1950 something or 60 something, than ever before. But now Volkswagen said they will only sell EVs in Norway from 2024 onwards. That means ICE is dead and Tesla is the king in Norway. And the reason I mention this too is because people think ICE is going to be around forever. It's not. It's being replaced, and ICE is an internal combustion engine, whether it burns diesel, petrol, gasoline, whatever you want to call it. Of course, diesel is different to gasoline. But Europe is 3 years behind Norway. But the European adoption curves of BEVs is going more vertical than Norway did. Therefore, Volkswagen may not be selling ICE vehicles in Europe in 3 years. That's how fast this disruption is happening. And let that sink in and understand what an opportunity we have as well. Speaking of that as well, the competition, General Motors, everybody talked about General Motors Cruise Robotaxi as being the Tesla killer. Well, they just got suspended in California because these machines are crap. And poor GM is screwed in so many different areas, it's not even funny. They're having a very bad year. Anywho, enough oxygen wasted on that. Global liquidity. This is important. Not only if you imagine the inverse correlation between interest rates and 10-year treasuries and Bitcoin, there's also one with global liquidity. We have not seen global liquidity come back yet. Imagine rates come down, okay, if the Fed hit pause on November 1st. Of course, the 10-year is going to come down. But what happens if this little global liquidity spikes up? Things will go bonkers, especially now with all the headlines of what Bitcoin is. It's going to pull in a lot of that liquidity very quickly. That's why this time is so different. We have massive price appreciation on Bitcoin, whether you're in rubles or yens or dollars, all over 100%. In fact, the dollar is one of the strongest currencies in the world right now. Imagine when liquidity comes back. And it is actually coming back. You just don't see it here yet. It's in the Cantillon machine. Those that are close to the machine are getting the money. They're becoming rich, but not us plebs down here. Anyhow, another good news too. Sorry, there's a lot of good news to cover today. There is a new pro-crypto, a guy called Tom Emmer. He was nominated to be Speaker of the House. He doesn't have the job yet, but he is nominated, and he might be, like all other politicians, he might be a complete swamp rat. I don't know, but I do know he's pro-crypto, and I care about that. He did introduce last year the Digital Asset Security Act, which is a regulatory framework for digital securities. He is pro-Bitcoin. He doesn't like Gary Gensler. I think in 2023, he sponsored the Keep Your Own Crypto Act, which meant you are allowed to have Bitcoin and nobody can take it from you. Very important. That's why I like him as well. Also, he wrote a letter to the CFTC urging the Commission to develop a regulatory framework for cryptocurrencies. And Emmer argued that the CFTC is the best agency to regulate crypto, not the SEC, because crypto is not a security. Well, Bitcoin is a commodity for sure. The rest is kind of a gray area. So that's why, Mr. Tom Emmer, good luck to you, sir. Hope you get the gig. Speaking of gigs, shout out to Hester Pierce. She came in and said, you know, she's talking about the spot ETF for Bitcoin, and she looks very happy and everything else. But she says the spot ETF is a reflection of the fact that there are a lot of firms that think the public is interested in these kinds of products. And obviously, we're seeing more and more interest from firms in these types of products as well. And I hear a lot of interest from investors in these type of products as well. Her sentence saying the same thing 3 times. So she's very pro-Bitcoin, pro-approving spot ETF. It's only a matter of time before Gary Gensler is bye-bye. Anywho, energy trading works. A lot of action in the energy world. You got big oil companies like Chevron buying companies like Hess Oil. But this is interesting. You look at BP versus total energy stocks, oil stocks. Hey, Jimmy, and look at Shell. Shell made over $11 billion just from energy trading. I need to look at our energy. We have a thing called a macro model that is designed exactly for that, to trade the difference between, say, an oil stock and oil price, or a company that uses a heavy commodity, whether it be lithium, whatever else, and the price of their stock, etc. So I'm going to dust that one off and do a session on that real soon as well. So a lot of stuff are in these videos. Everything is summarized by our team, and it's only 10 cents in addition as well. A lot more is coming. So if you don't have time to digest everything in every video, it's a big time investment. You can get that information right there as well. Now, time for the bad news. There's always going to be a good, the bad, and the ugly. And I use this because it used to be a cowboy movie I watched as a child, and I thought it was very interesting. Anyway, Cathie Wood did sell some Coinbase and GBTC shares. Obviously, as the price of GBTC goes down, the discount goes down and gets closer to zero, people will start diversifying and moving into different assets. So she bought a truckload of GBTC over the years and is lightening the load a little bit. She also bought a lot of Coinbase over the years and is lightening the load too. I'm not a Coinbase fan right now, but anyway, I use it, but I wouldn't buy the stock. Let's look at the Grayscale proxy discounts right now. The GBTC discount actually went up from 12.5% yesterday to 14.5% today. And the ETH was at 25%, I think, last week. Now it's 22%. And it was 55% 10 weeks ago. So those discounts are coming down hard. And they're going to come down real fast as soon as the spot ETF is approved. So if somebody wants to do a little ARB on ETH, the Grayscale ETH, I did, but we'll see. See where it goes. Not financial advice. In other news as well, this is in follow the leader news from Vinegar. You can see here that the Chinese PPI started rising about 4 months ago, and Jay Powell is trying to tame inflation, but the cold reality is the fact that, inflation was tapering down because China's PPI was in free fall in 2022, and the US gets a lot of their stuff from China. Now, if you lag this forward, you get a more digestible CPI now in late 2023. And China PPI was down minus 13% year over year versus this time last year. But that gift has run its course, and China's PPI bottomed in June. So if it just goes sideways from here until summertime, the black line in the chart will keep heading higher. And that's not good news for the Fed. As I say, the Fed do not control inflation. It's driven by things like where you get your stuff and how they are suffering, or the price of oil. That is the fact. They think they're in control, but they're not. All they can do is destroy demand. Okay? And we see that with the interest rates. Again, I'm tired of saying that, but the media loves to talk about all this type of stuff. But this is the harbinger of what's coming next. There may be no deflation. If the US continues to buy things from China as their PPI begins to explode, 4 to 6 months later, the US PPI will begin to explode too. Okay? Because the components are more expensive. And that's just how things work. Big thank you to everyone on Patreon, the one place for everything you need. No other community like it. Biggest finance community on the planet too, I'm proud to say. And thank you all for coming, everybody here. Over 3,000 viewers. We can tell the bull market is on. And thank you to the mods in the chat, T&D Tesla, and everybody else. I'll see you all tomorrow. Interesting one tomorrow, by the way. A little bit of a different tack, but because this channel is about financial freedom and taking control of your destiny, we'll be touching on that topic tomorrow with some both bad news and good news too. Okay, thanks all. See you tomorrow. Bye.